Welcome to Industry Vancouver, conversations about the residential real estate industry with Andrew Hasman and Jeff Bennett.
So Jeff, you and I have been selling real estate now for over 3 decades. We're ancient, and well, at least I'm ancient because look at the color of my hair. You've got a bit,
Look at the color of my beard.
you've got a full head of hair, and I'm, big time losing it. But that's, I guess, hopefully just a genetic thing. But definitely 32 years in the business. I think 33 for you, right?
35.
35. Okay, so yeah, you're really ancient, but you don't look it as much as I do. But that's okay. That's okay. You get the better genes, I guess.
I'll take the compliment.
I thought it was really, because we only had our last video cast a couple of weeks ago, but I really wanted to hop on the call today because the September stats came out. And, we've seen this thing before, but I'm seeing a market out there right now that is, we're in a prolonged sort of a buyer's market. There's a lot of stuff going on. And I see tremendous opportunity out there for anyone looking to buy a home. And surprisingly, I'm not seeing a lot of buyers. Like, I see a very thin buyer pool in certain market segments. If you're looking at the lower end of the market, cheap renovated little condo, maybe whatever, bit of a view, maybe there's more buyers at that end. But I just see a real void of buyers in the marketplace. And I see a lot of hesitation. And I thought, let's tell everyone kind of what we're reading. Because the September stats came out, and I see, at least in Vancouver, East and West, really no increase in sales activity from August to September. Typically, you'd see a pickup in September over August. This year, we haven't. So as September was sort of plodding along, I was just getting the impression that it hadn't really picked up yet. And I guess my gut instinct was kind of correct, that overall, we're still in very much a bit of a sluggish market to start the fall season here in Vancouver. What's your take?
My take is the same. So we saw a strong July. We saw a surprisingly active August relative to the rest of the months. And then September, I feel like I've been waiting for the first week. Oh, let's see if the activity picks up. Second week, oh, let's see if the activity picks up. Third week, let's see if the activity picks up. But it stayed consistent with what was happening in August.
Yeah.
It's not uncommon for the fall market not to really kick into gear until October, but we might also be in a situation where we just have a steady, even-keeled market with lots of opportunity and not many buyers out there.
Yeah, the buyers are just sort of hesitating, right? And I'm thinking, like, if there's ever a market to be getting excited about, it's the one we're sort of seeing now. Because you think about it, you go back 30 years, Jeff, and you're working with buyers. How often was it that buyers would end up, you'd be at an open house, it'd be 22 other parties at the open house, you'd be squished in there with 42 pairs of shoes at the front door.
Yeah.
And if you wanted to make an offer, it had to be tomorrow at 6 p.m. And if you had any conditions on it, you were basically laughed at. So basically, it was a seller's market, and it was a seller's way or the highway, basically. But how often has that been the case when you've been working with buyers if you go back 3 decades? And for me, it's like, that became the norm. Like, it was always, for anyone looking to buy a home in Vancouver, really, really tough. You had to offer on 3 or 4 places before you got successful on actually securing a place. You had to go in with minimal conditions, if any, in many cases. And it was just a really tough way to buy a house. The buyers were aggravated. The sellers, of course, they're always aggravated. They're always thinking they're not selling for high enough. They're always, selling too cheap. But it was a really stressful time to be buying real estate. And for the most part, that's always been the case in Vancouver. It's been a seller's market, and prices have always trended higher. There's been some bumps along the way. But what I'm seeing now is kind of this prolonged stagnating market. And of course, this year we didn't have a spring market. We had a little bit of a summer bump. We've started off the fall market very, very kind of stagnant again. But what I'm seeing is finally starting to see sellers, whether you call it capitulating or just throwing in the towel, and actually some of them actually reducing or accepting much lower prices. And I'm seeing some jaw-dropping, eye-popping selling prices on property out there that are like, wow, that was a phenomenal deal, like unbelievable. What are you seeing? Like, what's your take on it? But for me, it's been kind of like, it's been very attention-grabbing.
So I'm seeing the same kinds of things, and where I'm seeing still some strong activity on very well-priced, desirable homes are still getting a lot of attention and a lot happening. The activity seems to be coming initially right out of the gate. When a new listing comes out, people swarm down and look at it. If they can get an offer accepted, great. They're thrilled about that. And then if it goes past that first couple of few weeks, a lot of times it gets very quiet for a very long time between showings. And so it's become increasingly important to be dead accurate on your pricing and to do it right out of the gate in order to get a listing sold.
So, and we've talked about this before, obviously, but from the buy side, and what you just made that point where after a week or two, it was very quiet. The showings become very sort of sporadic at best. That tells me there's a very thin buyer pool out there. You get there's a bit of flurry at the buyers at the beginning. And then if the property doesn't meet the needs of, or maybe the price is not accurate, they go away. And then after that, it's just a trickle of activity. And I know this because I'm getting a lot of calls from realtors who we've showed their properties. And usually the next day they want feedback. And a couple of days later, they want to know if we're going to be submitting an offer. And, they're hungry. They want to get a deal done. And so for sellers that are kind of in denial, pricing at 6 months ago or last year's pricing, I think that they're going to just sit on the market. But for the sellers that, for whatever reason, what's going on in their lives, decide they have to sell, especially in the single family market, when you get over sort of 3 million on the west side, I've seen some pretty dramatic price drops. I'm seeing 50-foot building lots in the west side selling probably somewhere around 25% below their peaks, like pretty dramatic.
Would you say 25% below the peak of 2022 or 25% below the peak of 2016?
Yeah, so good question, because we had that peak in 16, little bump in 17, then we had the COVID bump, 2021, 2022, and then it sort of just went flat. Sellers in denial, waiting and waiting, and all of a sudden, I think really since sort of March, April, we've seen a real drop-off in prices of certain types of properties in Vancouver. And I've got some listings in these older homes, 50, 60-foot lots, which would be ideal building lots, multiplex lots, great locations, Mackenzie Heights, Kerrisdale, Dunbar, and properties that would have easily sold for 4 million, 4.2 at the peak are now selling close to $1 million below that, like 3.1 to 3.3, maybe 3.4, like pretty big drops. And they've been on the market for a while, and the sellers just sort of said, okay, enough is enough. We're taking an offer. And so it's been quite eye-popping just seeing some of these prices coming through all of a sudden on some of these very desirable west side properties.
And Andrew, the thing that's been eye-popping for me, though, is not so much the prices. I mean, that's just a fluctuation of the market. The market pays what the market pays. What I've been a little bit surprised by is, I want to say, the lack of recognition of the opportunity that's presented to people in these situations. Like, yes, I get it. If you had sold your, let's call it your condo for $50,000 over the asking price, and you got a huge number for that in 2022 in the spring, but then you had to go out and do the same thing on the house that you were trading up to, the gap was never wider than it was at that moment. Whereas now, yes, you're taking a lot less than what your expectations were or what you might have got in the past. No question. And the purchase price that you're going to pay and the gap from your trade up is so much less now. And so where I always go back to is, you should try and time your life. Don't try and time the market. But even if the market is down from where it was really exciting, there's actually a bigger advantage for you in the trade up than there was in selling for a huge price now and then having to spend all that money and more on the next thing that you go to.
And that's my point. Like, it's tremendous opportunity right now. The gap is narrowed. And if you can get over the fact, I'm having this conversation with a lot of clients that are in that exact same position. They've got a property to sell. It's come off on its peak price. And I try to have them focus not on what they're selling their property for, but the differential between what they're going to walk away with on their property and what they got to pay for the next property. It's all about the differential. And if they can see that differential and how it's come down in many respects, it's just opportunity knocking. But a lot of people have a hard time with that. A lot of sellers, well, I paid, $850 for my condo and You're telling me it's only worth 775. I can't do 75K. And I try to show them that the gap between that and the home they're trying to buy is actually come down by 125. So they're actually ahead of the game, right? But it's a process you have to sort of educate people on. The people that are getting it and are making the move, I think they're taking advantage of tremendous opportunity in the marketplace. And again, you go back 30 years, this sort of window has not been out there that often. It's usually the other way around. It's a seller's market. It's gangbuster busy. You always have to sort of succumb to the seller's terms, otherwise you're out. But in this case, you can negotiate. You can ask for things you normally wouldn't ask for. You can take longer subjects. You can pick your dates. The buyers have a phenomenal opportunity right now.
Well, and Andrew, I go back to my own personal experience on this. Heather and I, we bought our first place at a frothy peak in the market, lived there for 7 years. It was great.
Yeah.
Came time to sell, you know, and we needed more space. We needed more rooms. We wanted to get into a house. We weren't looking at taking slightly less profit. We sold at a 30% loss and 100% elimination of our original down payment.
Right, right. Ouch.
Yeah. And the thing that we traded up to, the gap had never been shorter. So this is not advice I'm giving without being willing to do it myself. And so when I look now and I see, okay, yeah, so you bought it here, now it's worth this. It used to be worth that, but the trade up used to be this much and now it's this much. I think, oh my gosh, like go ahead and do it. Like you want to be in a bigger place. You want to be in a different neighborhood. Do you want to let the market tell you where to live, or do you want to take advantage of a lift up in the future in your new place? The market value is just what it is, but the sooner we all as realtors and as sellers and as buyers come to acceptance of that, the faster we can move on in our lives and do the things and be the places we want to be and take advantage of that for the future, right?
I couldn't make much more sense. And I just feel that a lot of buyers are sitting on the fence. They're waiting, and I think they're waiting for the market to get busy again so they can compete. Whereas right now, they can call the shots. And if you're in a position to buy, like if you've sold your property and you know how much you have to walk away with and you know your dates, you can go in and negotiate tough. There's sellers out there right now that some of them need to sell. They got stuff going on. Maybe the homes are vacant, and if they don't get them sold, they're going to pay speculation tax next year. We just don't know, right? But there's absolutely people out there that, for whatever reason, need to move on with their lives. And I just think it's a tremendous opportunity that so many people are just sort of ignoring and waiting for the market to get busy again. It's frustrating because this time last year, I was saying to Jill, we had a handful of really motivated buyers all looking to buy. And of course, they've all since bought. This year, at the exact same time, I'm looking at my buyer list, and I've got these buyers, but they're all people that need to sell property first. So they're not buyers ready to go. They're buyers that will be buyers once they've sold their properties, right? And they're out there looking, and they're asking me if they can make subject to the sale. And we talked about this a couple of weeks ago, and they absolutely can. But if they really want to get the best deal, they really need to be sold, and then they can offer, knowing how much money they have. Otherwise, in this market with not a lot of sales, sometimes it can be really hard to peg what your property is going to sell for. There's a lot of comparables. I mean, we just brought a property on the market, and when I did the first evaluation in June, I had X price.
Yeah.
And when I priced it just last week, I said to them, I said, you guys, that price is 4 months ago. The market shifted. And if you remember 4 months ago, Jeff, nothing was selling. It was during the shock and awe of the tariffs.
Yeah.
We had comparables. Like we were just going based on early 25 sales or late 24 sales. And then all of a sudden stuff started to sell a bit at lower price levels. And now, you know, having to say to the sellers, look, that price was then, this is what it is now. And so a lot of sellers are kind of just, you know, that's why we've got all this inventory. And the inventory, seeing it's kind of building, not dramatically, but it is building. Stuff is sitting because it's not priced correctly. And so it's becoming more of a buyer's market, right? I mean, that's what's happening.
Well, and Andrew, when we sold our place before we moved up to our first house, like we sold and then we went to a rental because we wanted to be sold first. We wanted to be able to trade our convenience for other people's money. And so we sold for maybe a little bit more than we might have if we needed to stay in the place, but we got out almost immediately, went to a rental.
Yeah.
Because they needed it quicker. And then the place that we ended up offering on came on the market, I think it was the last week in November, and they were looking at offers in the first week of December. And we just said, okay, great.
Good timing.
We want to close in 3 weeks. Done.
Yes. Yeah.
Got a great buy on it at that time too.
Because you guys were ready to buy. You had your money, or at least you knew exactly where you were at.
Exactly.
No nonsense, right? Just nice and easy. That's the way to do it.
Now, I know too, though, Andrew, like there's so much noise in the media right now about, well, let's just call it bad real estate news. But I think what it's done is it's really caused people to sort of go to the sidelines and say, well, you know what? This sounds scary. I don't understand it. I'm not going to do anything. And that's going to be my answer to this. But not making a decision is absolutely a decision. And when we hear about people saying, oh, I don't want to buy right now because I think the market's going to do this, that, or the other thing.
Yeah.
I always go back to the idea of people that are in homes. Not selling is no different than buying a house. So if you've got somebody who's in a place and they're comfortable and maybe just a little bit uncomfortable and they think, oh, I'm going to hang on to this home, I'm going to wait and see what happens in the market. That's no different, the actual result of that, than somebody who buys one that same day, because you're just trading money for accommodation versus you're just keeping your accommodation, which has a value in the market. So by not selling today is exactly the same as buying. So I always want to sort of think about the 180-degree rule, like whatever everybody else is doing, I should probably just do the opposite.
Warren Buffett always say, be greedy when the market's fearful and fearful when the market's greedy. Do the opposite, right? It's hard to do though, because you're going against emotion, right? But it's definitely, if you look at what's going on out there and you've got the ability to buy a property, I don't think there's been a better time going back a number of years. I think there's just tremendous opportunity. You can make some really good bids, and there's people out there that need to sell. Look at the brand new construction market with all the shadow inventory. I believe there's something like 5,000 condos sitting on the market, built, brand new and unsold, sitting on developers' balance sheets. Well, those developers have got to finance those. Yeah. And they got to pay their mortgage payments. So some of those developers, some more than others, need to get some sales under their belt. And we can see that based on all the incentives we get, realtor incentives. They want you to come into their sales presentation centers. They're offering as a bonus. They're offering the buyers a decorating allowance or going in a parking stall. They want our business. They want buyers to come in and buy real estate. And there's, again, tremendous opportunity. I don't want any buyers telling me that, the last 4 places they bought, it was competing offers. It's a crazy market. I had to do everything for the seller and nothing for me. Well, now's your chance to actually get what you want.
Absolutely.
And get off the fence. And this is your market for buyers. There hasn't been a better time in years.
I've got a great graph. Okay, as is my custom. I've done a little research. This is something that I've tracked. Here, I'm going to put this graph up. So this is something, Andrew, that I've tracked over. Have you got the graph up?
Yep, I can see it. We're going back to 1977. So we're going back about 50 years. That's,
we're going back 50 years. Yeah. And what this does is it tracks affordability that we talk about from time to time. It's on a standard mortgage, posted 5-year rates relative to average incomes. It's as much a measure of unaffordability as affordability. But what I wanted to take a look at was affordability has been steadily eroding over the years.
Right.
But the peaks and the valleys, while it erodes, that deviation from the mean, like if the mean goes like this, and we measured the risk of being on either side of that by the deviation from the mean, I wanted to sort of chart and project what that means for where we are right now and what could be coming in the future. So when we look back here in 1977, that was the height of affordability.
36% of your income needed to buy a property. Is that correct?
Exactly.
Okay.
Then in the early 80s, we saw the spike up here.
That was interest rates.
Exactly.
Yeah.
And then fell back. But at the same time, too, how much you were spending on a monthly basis. I mean, that's the measure that we all work with in order
Because when you get a mortgage today, like any time, when you get a mortgage, banks don't want payments to be more than about 32% of your gross income, correct?
Correct.
And that would be considered the top of affordable, basically. That's the line. Roughly just over about a third of your income should be going towards shelter.
Yeah, but we haven't been anywhere close to that for
Right. Yeah, yeah. Since 19...
There's been a lot of contributing factors to that.
Sure. Yeah.
Outside money, not everybody buys with 25% down. Some of them are high ratio, but some of them have much higher. As the prices have increased, the affordability has eroded.
Yeah.
But if we look at where the best and worst times were to buy, that gives us a clue of where we are in the cycle now. So in the early 80s, at the peak of that market, you did not want to be buying a house because sure enough, the prices have crashed down just after that. And then the prices started to go up until the mid 90s. So this is where Heather and I bought our first condo. And then over the next number of years,
all the way to 2001, the market was pretty soft in BC. I remember that. Prices were sort of going sideways, down a bit. We had no sort of growth, right?
Exactly.
Yeah.
And then but when the affordability hit this bottom point here, that's when we sold and traded up. So prices had come down, interest rates had come down, wages had gone up. Like everything was happening in sort of a perfect storm of, hey, this is what's about to happen. Like,
yeah.
And then we saw again, affordability eroded over the next number of years.
And that was a nice steady rise from about 2001 to about 2008.
Yes.
The market just was steadily rising.
And then we had the 2008 financial crisis.
Yeah, and that was brief. That was what, like 9 months? It didn't last very long.
Not last long at all, but the affordability, so we got to invert the graph.
Yeah.
The affordability went way up.
Yeah.
As indicated by the line going way down.
I recall prices falling about 20-25% very briefly. It was a pretty dramatic, quick drop.
Yes.
Followed by a very quick bounce back.
Yes.
Right? Yeah.
So once again, if you had bought, and we saw this happen with a number of places in early 2008, 33-foot lots on the west side. I can remember distinctly they were going sort of $1.25 million to $1.3 million right in the
and they went down. They went down to like 900 grand or 800 grand.
Exactly.
Yeah.
But then the prices started to rise again, and once again the affordability started to erode. And then we hit our next peak in 2016 when the prices were as high as they were.
And Jeff, I just want to stop you for 1 sec. So that period from 2009 to about 2016, if I'm not mistaken, a lot of that was as a result of a lot of capital flowing in from overseas. You had a lot of foreign buyers. That really accelerated during that time. Am I not correct?
It really did.
Yeah.
Just to be clear, this isn't a pricing graph. This is a graph of how much it costs on a monthly basis to own a house. So
right. Yeah, no, I get that.
But it goes in line with the prices. So
but also as well, and I'll let you continue. If I'm not mistaken, interest rates during that time were not going up. If anything, they were continuing to trend down. I mean, there might have been some bumps along the way, but I think interest rates, the affordability wasn't eroding as a result of interest rates. It was eroding as a result of prices rising.
Prices rising, exactly.
Yes. Yeah.
And then we saw 2016, foreign buyer tax was introduced.
So government policy.
Yeah. And you remember prices then came down.
Yes.
Demand dropped off. And we got to this other low point here in, I think, probably 2019, I want to say.
Yes, I believe it was 19. Yeah.
Another sort of bottom of the market. And then things started to pick up a little bit. And then we hit COVID and the inventory went like this. And the buyer demand went like that.
Yeah.
Interest rates went like this.
Yeah.
And
free money.
Well, amazing, right? And then and that's where I think the actual number on this, it went up to like 122% of your monthly, which was pretty major. And then now where we are here is much better than where we were in 22. But I guess the important takeaway for me in this is that we're past the peak and we're in one of these.
We're in that zone.
Yeah, like you're here, or you're here, or you're here, or here, or maybe even you're just right here, which is a much better time to buy than here. maybe not as good as here, but over the long term, you're probably in pretty good shape, right?
So the question everyone has, but of course no one knows, is do we continue to fall down below that lower level bench or the lower level line that's
the lower standard deviation from...
Thank you. Okay. You're more the stats guy than I am. Do we drop below that or does it bounce before that? Of course, no one really knows. But I just get the sense because clients will say, Andrew, we're going to wait till the spring because the market's going to turn around and we're going to see prices start to go back up again. And I just don't see that. I see maybe the market turning and sales activity starting to stabilize and picking back up again. But keep in mind, we are seeing sales levels that are just so far below the 10-year averages. I mean, month of September in the West Side, there were 56 single detached homes sold. And a normal September, I think, would be quite a lot more than that, probably closer to 100. Yeah, it'd be quite, and same on the East Side too, right? Just pretty low numbers. But again, these are interesting times. I just felt and feel that when I see such a void of buyers out there, very small pool, I'm thinking, boy, there's ever been a better time to sell or by the time to buy, it's totally in the buyer's favor. This is just a great time. I just don't get it.
I've got some notes.
Yeah.
But the thing that I always come back to is, like when I think about sort of the early days of my career, I spent a lot of time working all over Vancouver, selling detached houses, and primarily with folks that had been in their homes for 30, 40, 50 years.
Yeah. Yeah.
And in that time that I was working with those people, it was interesting. Very few of them ever said to me, oh gosh, I wish I'd waited 6 months 30 years ago to buy my house.
Yeah. Didn't matter. Didn't make any difference.
What? Not a bit of difference. And at the same time, it's very unusual to come across a rich, old renter.
You're right. Yes.
It's not that common a thing.
Yeah.
Do we find a lot of people, like even if they bought at the market peak in 1981, by the time 2000 rolled around,
yeah,
they're doing great.
They made a great decision, right? They look like they were champions. Yeah.
Even better if they hung on till 2025. So, when I look at the framework, if we're buying timing based or we're looking at performance cycles, rather than asking, is this actually affordable? A question that keeps getting harder to answer is, am I buying below trend and ahead of the next upcycle? So when we look at where we are, the market's come off the peak. The average detached price in 2022 was 2.3 million. By mid to late 2025, we're actually below that. We're at like 1.95 million.
Yeah.
Mortgage rates peaked 2023, 2024. Now they've moderated and coming down. If we look at that early 1980s, we had the peak year, and then we had a correction period, 2 or 3 years from 82 to 85.
Yeah.
But then we had that late 80s boom again, right?
Post Expo, right? Yeah.
Mid 90s, we had our peak year, 1995. And then we had 96 to 2000. We
Flat
had
down. Yeah.
correction period again. And then we had that return to growth, 2002, 2007. We had that big expansion. 2008 financial crisis.
Breathed.
And then turned and did go up again. Post 2016, 2017 to 2019, again, correction period.
Government policy.
2021, 2022, we had this massive
COVID
surge, the pandemic boom, and now we're 2023 to 2025 is our current position. So like if I'm looking historically, and I know history doesn't repeat itself, but it does tend to rhyme, right? So when we look at these things and we say, well, if I need a house to live in, if I need a home, if I'm going to be there for 5, 10, 15, 20 years, however long,
and that made a difference.
It's maybe not the best time, but it's certainly not the worst.
First time. Yeah. Well, again, so based on what you're telling me there, then it kind of feels like the market, again, no one knows, but the market finds its footing sometime in 26. And 27, 28, 29 are going to be great years for the market. Right. Prices going up again, more momentum.
Right. Here's our prediction.
There you go.
We've reached the bottom.
Not everything goes in ebbs and flows, right? But it feels like we're just in that ebb right now, and how long it's going to last. And I just think that for those people out there that are in a position to buy, like you said, you can never pick the bottom, just like you can't ever pick the top. But when things are out of favor, you have the ability to negotiate a much better deal versus when it's a seller's market. No question.
Absolutely. So let's take like who should consider entering the market now. So long-term owners, strong timing for them, good.
Yep.
Under the previous high, good. Equity-rich upsizers, great use of cash in a sideways or downwards facing market. It's probably a reasonable time, but not the best time if you're an investor with low leverage. Like if you want to just get back into the market, you want to take some money off the table in the stock market, probably not the worst. For a flipper or short-term buyer, I would say still too risky unless you're adding significant value to something and creating a basically new product. I would say you don't want to be in this for the short haul. And if you're just thinking you're going to buy something and the prices are going to go up in the spring and you're going to sell at a profit.
Don't bother. And also the government's going to take a good chunk of your profit with the flipping tax as well. So the incentive there is almost, it's not there.
For sure.
Yeah.
So what are we trying to figure out today? So inside Vancouver only, property type and sub area using the housing price index and benchmarks from, let's go back to 2016, 2022, currently. Where are prices down the most and where are prices down the least as far as capital preservation goes?
Yeah. Yeah.
Now, the single biggest takeaway on that for me is Vancouver West detached is down substantially, even from April 2022. It's still down below the 2016 levels.
Yeah. Yeah.
So our best trade-up zones, Shaughnessy, Point Grey, Kerrisdale, Dunbar, Budas. There's tons of inventory, large absolute dollar discounts, and high-quality locations.
Like when I look at the sales again, so we're talking about the pricier neighborhoods of the city, right? And so just, last month as an example, between 4 million and up, there were 12 sales last month and there's about just over 400 listings. So 12 sales, 400 listings. In percentage terms, what is that, 2%? Right?
You're a buyer. That's a magic number.
So that's
3.5 years of supply. It's like giddy up.
That's just crazy. So that there's definitely some falling prices in those categories. There's just no buying pressure. It's almost illiquid, that market, right? So you're going to have people in that. You're going to have some of those 400 property listings. There's going to be some homeowners in there that for whatever reason just need to sell their property. I saw one in Kerrisdale. It started off at 4.2 in November last year. 4.2 just sold for 3.3.
Yeah.
And it's assessed at 4.3. So $1 million under assessment. Lovely big 1980s house. Needed a reno, this and that. But the point is $1 million below assessment and dramatically below where they started off, and a nice livable house. So that's one of many. And I just feel like, wow, that end of the market, there's tremendous opportunity. And like you said, tremendous move up opportunity, right?
Well, Andrew, great point, because if you want to move from the east side to the west side, it's never been better. Like prices are down 10% from the peak of 2016 on the west side. They're actually still up 16% on the east side. So when those two things happen, it's like, let's go.
And it's funny, I was just doing an evaluation in Queen's Park in New West.
Yeah.
When I look at the numbers there, according to the stats, prices are kind of holding. There hasn't really been any erosion. It's been pretty nominal. So again, that speaks to what you're saying is some of the areas, and I would imagine these areas that are holding their prices are areas where predominantly owner-occupied neighborhoods, local money, it's local. So, and it's at price levels where you've got a lot of that local market, right? And so those prices haven't really adjusted, but it's in a lot of this higher, pricier stuff that maybe were purchased by people from outside the city or outside the country, and these houses are sitting there empty. Because a lot of the ones that we go into at these higher levels, the houses are all empty. They're staged. You can tell there's no one living there.
Yeah.
They've gone back to wherever they came from, and they're on the market. They want to sell these empty houses, empty, expensive houses, right?
Exactly. So I asked the question, what are 3 clear plays that we can act on this fall? Trade up from an east side detached to a west side detached. Sell into the relative east side strength. Buy west side where prices are down since 2022 and in pockets still down versus 2016.
Yeah.
Prioritize livable homes, gated finishes to capture the discount without heavy capital expenditure once you get in there.
So a house is maybe hasn't been renovated in 25 years,
Yeah.
or maybe it's a 1990s vintage house in original
Yeah.
condition. It's got all the right rooms,
Yes.
but it's got the, I don't know, the red or the green toilet and bathtubs and the old brass fixtures and
Nope. Brass is back, Andrew.
I know it is, I know, but it's got the pink carpet and the green walls or whatever, but clearly dated,
Yeah.
but solid homes that need a nice remodel facelift.
Yes.
Tremendous value, right? Tremendous
Absolutely.
value. Yeah, yeah.
And when you sold your house, downsized into a West Side concrete condo. So the West Side condo basket down since 2022. Target a larger 1+ den or a 2-bed in Fairview, Falls Creek, South Granville, Kitsilano. Rental income optionality remains strong in those, but we're starting to see downwards pressure on prices as well. But if you can sell your house and you're downsizing to a condo, the condo markets, especially at the luxury end, it's been hit even harder than
that market's been just hammered. But again, tremendous opportunity for the buyers. Yeah.
Third option, family on a budget. East Side townhouses are down since 2022 without half duplex construction risk. So if you factor that in, there's even more available out there.
Yeah.
I just think there's tons of places you could go. And if you're selling a West Side condo or an East Side condo, is sort of the strongest performing market right now segment. If you can sell either of those two and trade up to something at the townhouse level, or if you make it all the way to a detached house, I think you're going to be doing very well.
Jeff, how's the duplex market? Because I know they're going up like all over the city. What's that market doing? I haven't really looked in the last few months.
So we went out on a little tour, I want to say 2.5 weeks ago.
Okay.
And we looked at all of the luxury duplex, triplex, fourplex that was available one weekend. And we saw some amazing stuff, and offers are coming in on the ones that are priced aggressively with the right finishings and decent layouts. Anything that's a little bit quirky or a weird layout or maybe a renovation not gone very well.
Yeah.
They tend to be sitting there, and you can see when you're talking to the agents, wow, Jeff, great to see you.
Yeah.
If you're going to buy it, what do we need to do to make a deal here?
Yeah.
So there's that metatext. That market is, once again, lots of opportunities. And the ones that are well priced, well presented, well designed, and well finished, they're still selling very well.
Yeah. Okay. I suspect when the market does turn and things stabilize, the duplex market's going to do really well. I think it's, so obviously it's an affordable alternative.
Absolutely.
I've been into some really nice ones. Seeing a few on the west side being built on 50-foot lots, so much larger ones. I haven't seen any of those recently sell, but I've seen some much larger half duplexes. So it'll be interesting to see what the market's like for those. But it's no question, it's an affordable alternative for someone that doesn't want to get into a single family.
For sure.
Right? So the takeaway here is if you're looking to buy a home, condo, townhouse, doesn't really matter.
Yeah.
You got to give us a call because there's some tremendous opportunity out there, and there's never been a better time in recent years to step into the market. Interest rates look like they're trending down a bit. There's another Bank of Canada meeting in a few weeks. I think it's October 27th.
Yep.
And I think the consensus is that they're probably going to cut again, but I'm not 100%, but probably going to be another 25 basis point cut, I think.
Oh, let's do it. Let's do a bet.
Okay. Well, I think they're going to cut again. I think
they're going to hold.
Okay, so there you go. Okay, so interesting. Okay.
So we'll watch for that.
Yeah, we'll watch.
The big takeaway for me, Andrew, is that if I'm an investor, I am probably going to wait. I'm going to sit on the sidelines a little bit longer and actually wait for it to bottom. And then if we see a sort of a 10% lift coming out of undersupply shock or something like that,
you might see them sort of dipping their toes back in.
Yeah. Then I'm going to go back to it. But if I'm a person who needs a place to live, if I'm a family, if I'm whatever I am, I need a roof over my head. I'm not going to let the market tell me what to do. I'm going to time my life in this thing. And I'm going to take advantage of the fact that if I'm a first-time buyer, there's all kinds of great stuff out there. If I'm a trade-up buyer, it's actually the best time in the world to do that.
Yeah.
If I ever thought, oh, I want to get out of this thing and into another thing or a different location or whatever, I'm going to take a look at all those numbers and figures and think, wow, what's the best move that I can make right now? And I think for people that are in condos that have been there for a while. They built up some equity, and now they're thinking, well, is now the time to make the leap for the house? Yes, now's the time to make the leap for the house.
Yeah. Yeah.
Is now the time to move to that neighborhood where the school is that they want to have access to? Now is the time to do that.
Yeah. I mean, there's never been a better time. The numbers are definitely in favor. It never lasts. It only lasts so long. And all of a sudden, the market sort of starts to shift and that window slowly closes. But right now, it's wide open. So buyers, take note.
Yes.
And take advantage.
Sellers, take action.
Let's take action. And if you are, some are in denial. You know, we know who they are. But again, everyone's got their own motivation and reasons for
Absolutely
doing what they do. So we respect all of that. But we're always here to help out our clients. And Jeff, do you want to do our disclaimer? You do it way better than I do.
Yes.
Yeah. Yeah.
We want to offer relevant, actionable information. That said, this is not investment advice and should not be construed as such. We're better realtors than accountants, lawyers, and financial advisors. Full disclosure, we are owners of Vancouver real estate. We like it when prices go up, and we make a fee when we help you. Now, I'm going to add something.
Yes.
If you're listening, and thank you for listening, and you're enjoying this, feel free to forward it to a friend.
Yes, absolutely. And is there a subscribe button that they can click on to subscribe? I think there is.
I think there probably is. If you go to either of our YouTube channels,
then you can subscribe.
Yeah,
yes.
you can like and subscribe. Isn't that what the
There you go, Jeff. I'll put my glasses up too. People can see our faces better. So we're now in the first week in October.
Yeah.
I think we'll probably be doing another one of these towards the back end of the month.
Yeah.
It'll give us the ability to have a great read on what's going on, because then we're really truly into the fall market, because September is a transitional month. I always tell my clients second, third week in the month is when things sort of turn around. I was just kind of surprised this year when we weren't any higher than August. In fact, we were a little bit down from August, at least in the markets that we work in. So it'll be interesting to see how October fares. I am expecting things to pick up a bit, but again, we'll have a better read on things towards the end of the month. And of course, Bank of Canada rate decision, October 27th, I think it is.
Yeah.
It'll be an interesting time to see what happens there. You say hold, I say 25 basis point cut. We'll see.
Absolutely. Thank you for listening.
Yeah. On that note, this is the fall season in Vancouver, the changing trees, the leaves. It's a beautiful time. Pumpkins, scary looking houses. It's a great time in Vancouver. Enjoy.
Yes. I'm Jeff Benna.
And Andrew Hassman.
And this is Industry Vancouver.
See you soon.
Thanks. Thanks for tuning in today. We appreciate your time and your attention. If we can be of further help or information, we look forward to hearing from you. We respectfully acknowledge that we live, work, and play on the traditional territories of the Coast Salish people, including the Musqueam, Squamish, and Tsleil-Waututh nations.